Take it as it comes. Good morning, everybody. I hope what you've seen so far has been great. We're going to talk about Bitcoin, a whole bunch of related topics, so hopefully it'll be a little bit freeform. We have a great panel with us today. On the far left, you've got Sonny Singh of BitPay. He's the Chief Commercial Officer there. It's the largest Bitcoin processor in the world, backed by Founders Fund, Index, and Richard Branson. Sonny was previously with Jumio, a payments and identity company backed by Andreessen Horowitz and Citibank. Sitting next to him is Jackson Palmer, who helped co-create Dogecoin, another cryptocurrency. He works at Adobe as a product marketing manager for Creative Cloud Services, and he's not currently actively involved with Dogecoin, but because he's a pioneer in the cryptocurrency realm, has a lot of interesting things to say. Next to him, we've got Adam Draper of Boost VC. He's a fourth-generation venture capitalist, which I think is almost unheard of at this point, given the venture capital realm's been around for about 50 years. Boost is a venture accelerator, basically, for almost entirely for Bitcoin-related startups at this point. He's been an angel investor, including in Coinbase, and his approach is sort of be awesome, and hopefully he's going to be awesome around Bitcoin over the next 10 or 20 years, so we'll see what happens. And directly to my left is Sean Percival of 500 Startups, which also is in the accelerator incubator space. He's a partner there, and you run the Mountain View facility, and also is very heavily Bitcoin focused. He's a marketer by trade, and so we'll bring a different perspective as well. So with the introductions aside, let's start with the beginning. So it's been a wild year for Bitcoin. Up over 1,100, down below 400, up over 600, down below 300. Volatility is not usually a good feature in a currency. So what effect is this having on Bitcoin adoption, and where do we go from here? Sonny, why don't you kick us off on that one and sort of...
Yeah, no, volatility has definitely been interesting for this year, although last year was much more volatile. But again, BitPay, we just deal with the merchants, though, and so the service we provide, though, is able to the merchants to accept Bitcoin, and we cash them back in the USD or other fiat currencies, and so we kind of hedge the risk for them, so the merchants never take any possession of Bitcoin or any Bitcoin risk per se. However, it never makes anything easy when the currency keeps fluctuating up or down. But we try to mitigate that risk for the merchants, and it's a new currency essentially, right? It's you're an inning 2 of a 9-inning baseball game, so you're going to have these fluctuations, and as more and more merchants accept it, more and more users start using it, I think the currency will eventually start stabilizing.
So, what ideally happens from here, Sean? Like, what do we want to see? If you were designing your ideal sort of Bitcoin to USD price chart, what happens over the next year or two?
Yeah, I mean, I try not to worry too much about the price itself.
It goes to 10,000.
It goes to $1 billion. It's funny, every panel has this question too. I don't really care of it as a currency. I look at it as a protocol and a technology. So the majority of my investment is investing in infrastructure,
right.
Things that will support the future adoption that will come. So I don't stress over too much. I know it's like a bad relationship. It's very on again, off again. Maybe the makeup sex will be really good in a year or two. We'll see. But for right now, I'm just really more focused on the infrastructure, and so I try and avoid that as much as I can.
I just wanted to comment and say, well, first I want to comment on that venture capital only been around for 50 years. Technically, investing in things has been around for a while.
Absolutely.
And Queen Isabella funded Columbus across the ocean, just in case anyone was wondering. So you're welcome for venture.
Thank you.
But right now we're in this, I think the volatility is the problem in Bitcoin, actually. We've funded a couple companies that are working on solving things like it. To solve the problem. Hedgy is the one that comes to mind quickest, which is allowing you to hedge for Bitcoin, so you're able to actually lock in a price. So on the merchant side, it makes the most sense. So BitPay, you guys should talk to. You should talk to them,
or buy them.
But we're actually in this. We're in this very interesting time in Bitcoin where. We're sort of, to Sean's point, we're in sort of a repair mode. It's been a little, I'll admit it, it's been a little boring. The price was really, really exciting. It went up to $1,200, and then China smashed it down, and so volume went down a little bit, and then speculation cooled a little bit. But now it's an actual useful tool. But we've had this toy for about 5 years, and there are problems with it, like all technologies, whether they be scalability problems, whether they be transaction problems, whether they be security problems. And now those are all basic infrastructure that's being repaired that will be fixed, that will be solved, and in the future we'll be able to actually capitalize. Those will be companies. Those are opportunities that entrepreneurs can solve. And so that's actually one of the reasons that we're so far, we're completely behind Bitcoin, is because we're really excited about that next generation that's going to be happening. All we see at Boost are like the smartest engineers, the smartest people going into the market. And that value, that work that is being generated by all those smart people, the value is going somewhere. And there'll be a delayed hit rate for that to reflect in the price. I mean, the thing that Bitcoin has that the internet didn't is just like a constant ticker of like how enthused people are about Bitcoin. And so people will point at it and say like, oh, it's not doing very well. When really, like, you know, everything's, I see things going pretty well. Like across all of our companies, all I see is 10 to 20% growth like every month. And it's like very exciting. So yes, that is my answer.
Yeah, I think really volatility is interesting because it has this two-pronged approach where, you know, back in the day when Bitcoin was up and down, you know, merchants didn't want to accept it because they could sell something and then lose half their money the next day. So that's where services like BitPay become really useful, because it can encourage merchant adoption because they can cash out on the day that they sell. But it also means that because you know that the price could double the next day, you as a consumer are less likely to spend as well. So it's been this kind of like ongoing battle, but I think the volatility is actually really stabilized over the last few months, and that's really good to see. But what's interesting is as it has stabilized and become less of the problem that we thought it was, transactions on the network have actually remained stable. And so what that tells me is that the problem isn't the price volatility, it's actually encouraging active use of the network. So I think we're probably going to talk about that.
Right, so that's great. That's a great segue into our next topic. So let's talk a little bit about transaction volume. There is some evidence that transaction volume is, I would say, finally trending upwards. It had been sitting in that sort of 50 to 60,000 per day, and then lately it's been, it looks like, the 70 to 80,000 per day. And if you look at the blockchain info, there's a little bit of a turn in the curve finally. But if you look at it in US dollars, it looks like a dead patient. It's pretty much a flat line over the last year or so. So what's going on there? Are transactions really up? How do we really know? How do we make sense of the data? And how do we get transactions moving forward?
Yeah, I think it's an interesting question. And what's interesting about Bitcoin, too, it's like, oh, we have the public ledger. We have all this data and this insights. But the reality is we have a lot of resolution issues. We don't know how many active users there are. We don't know how many active wallets are. A lot of the Bitcoin companies like to say, oh, 2 million plus. But it's not monthly active. So there's all this weird sort of juxtaposition of like, great, lots of resolution on data and then no resolution on data. So in terms, I think what we're seeing, and maybe this is also to the previous question, maybe we're in the plateau of productivity in the sort of hype cycle that we've all sort of seen and been compared to Bitcoin. So productivity to me is not a bad thing. You know, we're building more and then, tomorrow side chains are going to come in and that's going to limit resolution as well too. So I wouldn't obsess too much over it, but it does appear like transaction volume is increasing, which is a good thing.
What do you think, Sonny?
Yeah, I mean, again, it goes back to the price. Obviously, last year at this time, there were very few large merchants signed up. Now you've got several billion-dollar merchants like Newegg, Tiger Direct, Overstock, Expedia, that all accept Bitcoin. However, the price last year this time was $1,200.
Right.
So ticket items are much different now this year than they were last year. Also, though, when the price is $1,200, the media is talking about it everywhere. It's all over the news. And because it's been constant for the last couple of months, there's been no press around it. And as you said, it kind of seems like a dead patient almost. However, the merchants have been seeing great returns on this type of stuff. It's just not in the media anymore.
Are we seeing a replacement in the transactions that we see, to the extent that we have resolution, are we seeing a replacement of sort of trading transactions for actual transactions? Is that maybe going on? In other words, a lot of what we used to see was people just sort of moving Bitcoins around. Yeah. Now are they actually using them for something?
I think people are still show of hands here. Who's actually bought something with Bitcoin? Okay, so people are starting to spend now, where before people were just buying and holding as a speculative tool. Actually.
And who trades Bitcoin? Okay, so that's a positive. That's positive. Actually,
it's a lot less than I thought it would be. Actually, yeah.
Yeah, I think.
And who's just holding?
Oh yeah, who's hodling?
That's actually also positive.
Waiting for 10,000.
I think that kind of
no one wanted to admit it. Like everyone's like,
that kind of growth is something I really want to see, because I think you're right, it has been flatlining. There's been some uptick, but something I was just asking Sonny before we came in here was, when are they going to release their Black Friday stats? I really want to see whether there has been an uptick in adoption and usage of the currency. Obviously, Black Friday last year was a huge spike if you look at the network. I'm not seeing that myself on the blockchain, but there's also the possibility that a lot of this stuff's happening off chain. So I think that's another thing that blurs the lines these days, is that a lot of the companies that have kind of sprung up around merchant services are doing a lot of transactions off chain. So a lot of the data is kind of like in this black box that you can't get at, which I hope is made public. But I think historically most of the transaction volume on the Bitcoin network has been driven purely by fluctuations in the price and price volatility and the ability to arbitrage and trade. We'll see where that goes, but I think we need a bigger kick. Like if you look at today versus a year ago, there is growth, but it's very minimal growth. You need to see that kind of like hockey stick growth in the terms of transactions on the network.
I think the real problem is not necessarily yes, it's great that we're looking at the volume graph and everything, but it's where does Bitcoin actually add value? At that point, there will be transactions because there's a true need. So in the U.S., this is the worst place for Bitcoin to have taken off. Like we're 93% digital. We trust our banking system to some degree. We know our money will probably be here tomorrow.
We all have credit cards.
We all have credit cards. But that is not true in a lot of countries across the world. And so when you're thinking about Bitcoin, we should be thinking about what transactions are happening internationally. And that would be really interesting data to see if that number is growing. Anywhere where bank account adoptions 10% and cell phone adoptions 90% are really, really great places where Bitcoin can flourish because it sort of replaces the old way of storing value in cash underneath a mattress. Other places that Bitcoin can actually add value are microtransactions. ChangeTip just raised $3.5 million. Coinbase just released a microtransactions are actually a big way in which all of a sudden you can send micro amounts of money to anyone. Just say, hey, what up? Here's 3 cents. And then cross-border transactions are another huge use case. And so the way I'm looking at Bitcoin, the best analogy I was given for Bitcoin that I use all the time, I should probably cite who told me, I just am blanking on it right now, it was Marwan Forzley. He went through Boost. His name, he works for Align Commerce. They do B2B Bitcoin transactions. And basically, he said, so Bitcoin is like Skype. So originally the telcos had this huge monopoly on how long-distance calling worked. You were able to make these, they could charge you whatever they wanted. Like, I don't know if you ever 10 years ago made a call from Tanzania to the US, but it's something like $10 per minute. 10 years ago. But then Skype came along and they said, hey, as long as you're in our network, this will be free. But if you have to call outside the network, we're going to have to charge you because someone needs to be paid on the other end. And I believe that Bitcoin is the same way. I believe if you're in the network, it will always be free, relatively free transaction. There's some energy costs. But relatively free transactions. And then if you're cashing out into RMB, USD, any other place, you will have to actually pay a certain amount of money. It will never be completely free. Same reason that I believe Bitcoin will increase in value, but I don't believe that Bitcoin will ever actually take over the entire international currency system. I don't make every call on Skype.
Not even at 10,000.
Well, I don't. Well, it would have to be $1 million per Bitcoin for to take over the entire currency system. But I don't believe that just because I don't make every call on Skype. So same.
I think Adam's right. I think what we need is it's going to be the Bitcoin killer application and use case. I haven't seen that to date, and I'm constantly waiting for it to happen. I think once we have that, that's when we'll start seeing the growth that we need.
But is there one or are there 50? I mean, I guess the question is, if we're looking at this in the context of, and sorry, we're off script, but I think this is a good moment to go off script. If we're looking at this in the context of sort of the way the web took off, the killer application was the web browser, right? But it wasn't just one website. It was sort of a bunch of different things that sort of made people realize how significant and important this was. So are we waiting for one thing or are we waiting for 10 things?
For the mainstream America, obviously most people here in this room are early adopters. It's got to be easier to obtain Bitcoin and easier to use Bitcoin, right? Zappo had the credit card, which still in process, which makes things easier for people all the time outside of Silicon Valley. Always ask me, how do I get a Bitcoin, right? And that's a painful process for a lot of people, and it's much harder in developing countries to get Bitcoin. In America, where the use case isn't as great yet for Bitcoin, it's easy to get Bitcoin, relatively speaking, but in developing countries where people need Bitcoin, it's much harder and difficult to obtain, actually.
So you were asking sort of if it's similar to the internet ways. When the internet in '95, when I was in third grade or something, so I know all about this. But when the internet took off, everyone got the ideas right of what the internet could create. Everyone got delivering groceries on demand seemed like a really great idea then, because everyone was thinking, hey, you can communicate fluidly. But Webvan ended up losing $1 billion. But today, Instacart is doing incredibly well. Everyone had the right ideas, but it took 15 to 20 years for them all to be realized. I think we're in the same stage of Bitcoin. I think we're going to see a lot of, I think everyone has the right ideas of what the potential of Bitcoin could be. But it's going to take a little while. One thing that we have that the internet didn't have is we have the internet, so things might move a little faster. But generally, I think it's going to be there's going to be there's stages of these things need to roll out. Instacart didn't work until there was location-based. Everyone had these phones in their pockets that were more powerful than computers, and all the they're little technologies that need to be added together in order to make that true value happen.
Yeah, I think the other thing is that just like Skype's the internet is a messaging channel, Bitcoin to decentralized applications in the blockchain is a currency channel. So I think rather than saying that then there's going to be a whole bunch of killer apps for decentralized applications and blockchains.
Right.
Currency is just one of them, and for some reason we decided to choose the most difficult one first to focus on. But I think within that, I think another good example, with Skype, is WhatsApp. One of the reasons that WhatsApp had such huge growth in developing nations is because they made it super easy for people that had these old Nokias that ran Java applets to install WhatsApp and message for free, because the data was free as opposed to the really high SMS charges in developing nations. We need that kind of application if it's going to take off in these developing nations, and that's the kind of problem you have to solve. At the moment, I think for a lot of us, at least in this room, Bitcoin doesn't really solve many problems, but it could in developing nations. So if you make it easy, like Sonny was saying, then I think that's a winner.
Okay, so that's a good chance to segue. In 2014, we've seen some interesting things in the competitive space, not directly competing with Bitcoin, but sort of in alternative payments, right? We've seen things like Venmo take off, where people, if you're over 30, you probably have never used this, but if you're under 30, you apparently have probably split the bill with friends or used Venmo to split the rent with somebody who you share an apartment with. And on the other side, we've seen Apple now marshal almost every big bank in the country so that you can now take your phone, and at about 15% of merchants, you can tap your phone against something and pay that way. So what is the impact of sort of these other payment mechanisms on mindshare? Is this good for Bitcoin? Is it bad for Bitcoin? Is it good in general that we're sort of breaking away from the way we used to do things? And are these things really solving problems? Why don't you start us off, Sean?
Yeah, I think definitely good. For one, for new technologies, you have to have that aha moment. So I think if we think back to the first time we used PayPal, I remember the first time I was like, holy shit, I just sent money over the internet. It's that aha moment. Right. If you are younger, the first time you got a Tinder match, the first time you're on a social network, whatever it might be, you have that moment, you're like, wow. And I think that's what Apple Pay is. And everyone that uses it, especially for the first week or two it was out, it was like, I just used it. I took a photo. It was actually kind of a moment. So Apple is Apple, and Apple's not going to play well with others, because when you play well with others, you don't get your 30% or whatever they're looking to take. So I don't expect them to adopt Bitcoin ever. But if they are going to get millions of people to tap that phone, that's a great thing, because that's a very easy transition over to Bitcoin.
I think it's great. I think it's actually really great for the industry, because the payments industry in general has been very slow-moving, traditional, hard to disrupt. Companies like Wells Fargo, First Data, they're big. There's a lot of inefficiencies in the market. All the startups want to disrupt it, but it's very hard to do anything in this space. And I think Square was the first one that really caught everyone's attention, that came out with this dongle that was right underneath the eyes of all the payment processors, all the banks, credit card issuers, all like, wow, how did we miss this one? And because of that now, and then now Apple Pay and all that, they started waking up. And so now you see banks having VC arms out here, having all representatives out here trying to find and work with new technologies because they're all trying to make sure they don't miss anything now and they want to be a part of that.
Yeah, I think the thing is, like Sonny was saying, there's a lot of people that don't have Bitcoin, but there's something that pretty much everybody has, which is US dollars. If you can get people using digitized US dollars, which is essentially what it is, like when you put money into Venmo or Square, it's represented in a token, which is a tokenized US dollar. And we're getting to this point where Coinbase have now accepted, they have USD wallets, for example, which is really good. I think we're going to see a lot more of this stuff. If we can get, the bulk of the population comfortable with tapping their phones and transmitting tokenized US dollars, well, then it isn't much of a leap in the future to then switch that out and replace it with a decentralized currency. I think it's about changing the mindset. And if companies like Apple, Square, Snapchat with Snapcash, for instance, can get, especially the younger generation, the generation who are going to be, the adopters of this technology in the future, in the mindset that what they're transmitting, like, they're not, the older generation are attached to hard cold cash, but if we can get the current generation, the younger generation, in the mindset of sharing digitized tokens, well, then we can improve that digitized token to be decentralized, Bitcoin, whatever we want in the future.
Okay, so let me push back a little bit on that. I hate cash. Okay, I guess I'm between the older generation and the younger generation. I can't stand this stuff. I think it's a bacteria-infested, disgusting mess. And I dream of. Well, I mean,
there was a study saying like World Health would improve dramatically. Without using it.
Don't look it up if you don't want to know, but if you look it up, you're not going to want to use it either. So I dream of having about $20 or $50 stored up in this thing or in some wrist wearable that I can just tap against things and use in lieu of cash, right? Because if the transaction is bigger, I use a credit card. And yet it's got to replenish sort of in real time so that if I lose the phone, I don't lose hundreds of dollars in cash. So if I can store dollars in there, why do I want to store Bitcoin? Like, what's the difference? If I can store a tokenized US dollars with Square, what do I need to store Bitcoin for?
That's a really good question. I think to answer that, I think obviously, some of the philosophy behind Bitcoin is obviously, there's people who value the decentralized network. But on top of that, it is obviously easier to send across borders. You don't have the regulation, stuff like that. I think maybe in a far distant future we might see some sort of global token that kind of crosses boundaries. But I think you also have to say, well, this isn't just digitized cash on your phone. There was a really good article recently about how Apple Pay is more than just about sending money. It's actually about identity. And the way that they're securely storing it behind Touch ID on the iPhone is great. It's far more secure than any credit card that you own because you actually have it locked behind your fingerprint. So as a payment method, it's not just adding a cool way to have some cash on your phone. It's actually making the entire way you transact more secure. So for me, Apple Pay is more than just that. It's actually moving the whole payments platform security forward as well.
Right. In fact, if you guys steal my phone after this, you're not going to be able to do anything with my credit cards that are stored in here. Okay, well, that's good. So let's switch gears a little bit. We're sort of got into some technological stuff. So let's talk about some of the technology issues that are facing Bitcoin right now. There's been some concern that as transaction volumes rise, it's taking longer and longer to verify whether these transactions are valid or not. Are we going to face a problem when we move from the tens of thousands into the millions of transactions where Bitcoin's decentralized nature is a flaw in the system? Or are we going to be okay?
Sorry, are you focusing on the transaction problem specifically? Oh, well,
yeah,
I'll focus on.
Let's start with transactions. We'll move into some questions.
Okay,
about mining.
so we have a company called BlockCypher that's actually solving this with 99% certainty. A transaction can be confirmed within 10 seconds rather than 10 minutes. Also, what everyone should think about when they're thinking, oh, 10-minute transaction time, I'm going to sit up there at the front of the line for 10 minutes before I can actually pay for my food is that, the current system is like a 30-day system for a transaction to be confirmed. It's just someone is floating that cash so that you can move to the back of the line or pick up your coffee. And so it's just an interesting, like, it is currently still a faster method. It's just it confirms in 10 minutes. But these are all problems that can be solved by entrepreneurs. That's why we're backing 30 entrepreneurs in the next batch that are all focused on Bitcoin companies.
Yeah, I think when you talk about the scalability, and a lot of people do talk about the scalability and like the transaction volume, there's this kind of number, 7 transactions per second, I believe, is the number that people throw around, and how that can't ever scale to competing with Amex. I think it will scale because the technology will evolve. But, like, let's actually get to, a solid one transaction per second before we start worrying about it. I think if you look at the transaction volume, it is pretty much the same as it was last year. So I'm not worried about, waking up tomorrow and suddenly the Bitcoin network hasn't scaled to the point where it can handle 7 transactions per second. When the demand is there, when the use is there, well, then the technology and the software will evolve as it always does.
So you guys think it can grow over time? We don't have anything to worry about there. But maybe, what about on the mining side? Do we have to worry about the fact that most mining is in the hands of a handful of companies? Are any of those threats real? Do we have to worry about somebody controlling 50% of Bitcoins and saying, you know what, we're only going to verify our own transactions? I mean, where do we stand on that front?
Adam, you probably know mining the best, maybe. No?
Okay, so I'll take a stab at this. Yeah, I think centralization of mining is a really big issue that I think actually makes Bitcoin much easier to attack as a network. And it's going to become more and more of a problem, especially with the next halving, which I think is in another year, of block rewards. Miners serve 2 purposes. Mining does, and proof of work. It is the issuance mechanism, obviously, but it is also verifying the transactions and securing the network. So if, the problem there is that as your profitability layer becomes less and less profitable, so does the incentive to secure the network. And this is a problem which I think has been really interesting in my experience with Dogecoin. We face this exact same thing. For anybody that doesn't know, Dogecoin is essentially, as far as technologically, it is Bitcoin but sped up. Instead of over 40 years, we spend our block rewards over 12 months. So in January 2015, all 100 billion Dogecoins will be mined. The interesting thing that happens is as the incentive to secure the network goes away, the hash power on that network also goes down. And so it becomes a lot cheaper, a lot easier for a big miner to come along and successfully coordinate a 51% attack. So as it becomes more and more expensive because there's more competition to mine Bitcoin, and the block rewards go down from the 25 Bitcoin, they go to something smaller. As soon as these people that have these $1 million mining farms, as soon as it becomes not unprofitable for them to keep pumping electricity into it, they're going to move to something else. They're not securing the network out of the kindness of their hearts. They're there to make money. So this is a very real issue. In the case of Dogecoin, we did something called merge mining with Litecoin. So essentially, Litecoin has become our profitability layer. So as long as Litecoin mining remains profitable, then we benefit from their hash rate and the network remains secure. When that disappears, same problem. So I think this is more inherently a problem with proof of work as kind of a way of securing the network. And what's really exciting there is that there's a bunch of developments around more generalized consensus and fault-tolerant networks that don't require proof of work. So I think in the future, Bitcoin is going to have to move away from proof of work to something else.
I would add too, like the one thing I think we're seeing is that a lot of folks are moving away from mining Bitcoin to altcoins because they can generate more money through that and it's less competitive. Unfortunately, when they want to get liquid, they go to Bitcoin and they sell Bitcoin, so that depresses the price of Bitcoin. So that's what we seem to be seeing a lot more. So there's a lot of altcoins right now. I'm assuming that there'll be a rapture at some point and only a few will survive, and maybe that will improve the situation, but it's sort of hard to say.
But do we get a valley of death here where at some point the amount of people sort of securing the network falls off by a meaningful amount and we have to worry about this? Adam, are we nervous about this coming as the value of mining goes down? The prospectors all go home, and all of a sudden the people who were selling them the claim deeds are also out of business.
Well, I mean, again, to comment on Jackson, I feel sort of future problems personally, but
Okay.
but the yeah, I don't know. I don't have a good answer for that. Sorry.
I worry about it. I think that the next halving in Bitcoin, I believe, is 2016. I was talking with Dan Carey about this yesterday. I'm really worried about it. I think that ultimately we've seen a huge centralization of Bitcoin mining when there's really just a few entities which control most of the mining
It's
power.
like 3 or 4 mining
Yeah,
pools.
absolutely.
Right.
if one of those people disappears and you take away a quarter of the hash power from the network, then really it just takes collusion. Well, that could even happen today, but it takes collusion between two of them or just one of them to successfully undermine the entire network. So I really think it's a problem. But as with all things, we've got smart people working on the technology, and I think Bitcoin will get to a point where if that becomes a real problem, it'll be fixed. So.
Okay,
I got a
so
quick question, actually. I'm
Yeah.
curious. How many people in the crowd own other types of altcoins? So actually a lot.
and are you using them for anything, or are you just sort of collecting them at this point? Anybody? Mostly collect.
It's like Pokemon, gotta collect them all.
Absolutely. Okay, so we've got some concerns on the technical side, although it sounds like, I mean, at least there's some cautious optimism that they can be resolved. But in the meantime, this uncertainty makes potential consumers nervous, right? They don't really know whether these things are things they need to worry about, but the whole thing seems sort of murky and frightening. So how do we get the masses to sort of care about Bitcoin? What hasn't happened yet that needs to happen? Does it matter if Amazon accepts Bitcoin? Does it matter if Citibank says, your Bitcoin wallet is now attached to your Citi account? I mean, what do we really need to see happen for for regular folks to actually care, not just the folks in this room?
So I don't think that regular folks really care that the mining network or the halve rate or I don't think
Not even a
I
little.
don't think that's the issue. I think that there are black marks on the Bitcoin system in general.
Right.
I think people worry that it's used for illegal goods. I think people are worried that their money is going to be lost forever. And I would answer this by bringing back to my original statement where we need to find the use case that acquires mass adoption and really gives true value to Bitcoin. And for me, that is either cross-border transactions, remittances, or microtransactions. So I believe that in the next couple of years, we're going to be seeing a lot of those things start really working. Like our companies are actually providing value and having the cost of what it currently takes to send money cross borders. It's an exciting time for all payments. What we've done with Bitcoin is convince every awesome engineer in the world that fintech is sexy. And suddenly everyone's upping the game of financial technology, which is taken, we're still playing on 15-year-old mainframes. It's about time that someone was able to focus on it, and suddenly Bitcoin, we have a company that does AML KYC compliance that was started by two 25-year-old kids.
Which is what for those of us in the audience that didn't catch that?
Yeah, sorry, AML KYC, anti-money laundering and know your customer rules. They started out as a remittance company for Bitcoin to be able to send money cross borders. It's called BlockScore, and they realized that every Bitcoin company had this problem with compliance, and so they realized that the old system was very, very bad, and so they just created a better system for it. 5 years ago, they wouldn't have been caught dead doing AML KYC compliance. It sounds super, super boring, just saying it. And but now, because it's helping the Bitcoin ecosystem, it's helping a really big problem. They're very excited about it. And it's a great company, and they're doing fantastic. So,
Yeah, I think Adam's spot on with the use cases. Until you find the use cases that make it effective for people who need Bitcoin, it's not going to catch on. And one thing we're also trying to do at BitPay is enable people to get Bitcoin more easily. So we've also partnered up with a lot of payroll vendors, and so you can get part of your payroll in Bitcoin. So at BitPay, we get our payroll if we want, an option to get Bitcoin. So I think out of our 100 employees, 100% take some portion of their salary in Bitcoin.
How much are they taking? 5%? 10%?
We have engineers taking up to 100%, some of them.
Wow.
Which is not a smart diversification strategy, but people are pretty bullish actually. So, and they're also single young guys, engineers. So, but again, that makes it easy. Every 2 weeks, you get some Bitcoin allocated to your bank account now.
Well, as soon as Adam's dad gets it to 10,000, we're good to go. So.
But yeah, I think I think the other thing with Bitcoin is that it's very insular as a community. I think one of the things that really needs to happen is education. And now we have some things like Apple Pay and Square and that coming along and helping educate the masses around the need for digital currency. I think to date, Bitcoin has remained insular, and the reason the transaction volume has remained plateaued is because it's the same, 70,000 people using it every day. Typically, it's kind of attracted people who are libertarian, kind of anti-government, anti-fiat. the scary thing about that is that that's never going to get mainstream adoption. So we need to really change, I guess, the face of Bitcoin. Bitcoin has a huge PR problem, as we know from the Silk Road and stuff, and that's not the fault of the Bitcoin or Bitcoin developers, but in order to kind of reach the masses, we need to think outside the box. And I think a lot of people like to politicize Bitcoin, which I think is probably misguided, in that people that want to send $2 to their friend on Facebook don't really care about your political agenda. So yeah, I think that needs to change as well. Definitely the mindset of the people that are involved in Bitcoin.
I think I would quickly add that maybe we need to segment things where the consumers should actually never know they're using Bitcoin. And to me, that's when Bitcoin wins, when you're using it and you don't know. It's like, how do you get people excited about TCP/IP? You don't. Like, how do you get people like turned on about Swift as a payment? Like, it just doesn't happen. Right. And then there's the other group who are the technical folks, and we see a lot of this, and sometimes we call this like art for artists, where like only the Bitcoin people can really appreciate it. But I think this is sidechains, smart contracts, really interesting applications of the technology. The consumers are never going to want to know what that is. That scares them too much. So you have consumers who should be using it without knowing it, and then you have folks that want to go deeply technical on smart contracts and other things, that can geek out as much as they like.
Great. Okay, so that gives us a great little turn into the next question, and I'll change it a little bit based on what you just said, Sean. Tell me your favorite one or two startups or technological changes coming to Bitcoin and why they matter. And you can start us off, Sean.
Yeah, maybe a little bit biased. ChangeTip, who we invested in twice, actually. They're driving adoption. They're letting people sort of do microtransactions, once again, using Bitcoin without having really knowing what it is and what it does.
And so what are they doing? What is Chip?
You can provide tips with Twitter, Facebook, any social channel, but they're moving deeper into micropayments. That's the real larger vision. And so being able to tip a content creator. Lots of people want to make money online, and it's not just Airbnb and Uber. Like, people need to be making money in smaller increments, and Bitcoin's a perfect application for that.
Read my Forbes blog. Makes me about half a cent every time you do it. I kid. He just mentioned tipping. Anyway, so what about the technical stuff? You talked about the side chains and whatever. What's happening there? What's the next big thing that's going to matter that consumers don't need to see, but that we might find interesting? Some of the people in the audience who sort of pay attention to that stuff.
Yeah, and then I think a lot of that's sort of in the sort of API. Adam mentioned BlockCypher. I've invested in them. Chain.com, Neuroware. So I'm triple invested into that. So basically allowing people to develop with Bitcoin without having to know it, without having to host Bitcoin D, without having basically sort of easing development. So as these banks and other folks come online, it's not this wild, crazy maze. Right. They're literally just grabbing plug and play, boom, like what Bootstrap did for a lot of websites, what CDNs have done for websites. They're basically plugging in, building very quickly and efficiently.
So a lot of infrastructure building blocks that can just make it easier to get us to the next level. Okay, Adam, so you've got a whole bunch of companies. Tell us what your favorite babies are.
It's like picking children, so it'd be really difficult for me to do, but there are two here, so I'm just going to make those my two.
Fair enough.
Align Commerce, which I already mentioned earlier, where they do B2B cross-border transactions, which is, I believe, a huge use case, so it makes complete sense. And then Crowdcurity, who is not necessarily specifically Bitcoin, but they have completely targeted the sector, and they protect everyone they crowdsource bug bounty programs. Security is like a huge problem, and Bitcoin companies don't have the money to spend that Google does to protect their websites, so use Crowdcurity if you're a Bitcoin company. I would recommend it. All of our companies do, so those would be. I'm using those too.
Okay.
I could go through the whole list if you guys want to.
Maybe
Yeah?
maybe after the panel, Adam will
Okay, we got
stand in the
Hedgie.
corner. He'll talk his whole book of about 50 companies for you.
Mirror X. Okay.
Okay, I think my favorites, and this is probably an unpopular opinion, but I'm a really big fan of PayPal, and I think that PayPal, Braintree, Venmo, that whole tree of products are making huge changes to the way that people think about payments, and PayPal has, since the beginning of online payments, been doing that at the forefront. It has a lot of haters, but I don't know, if you haven't used Venmo, go and use Venmo and see how amazing it is. It's one of the best digital currency apps I've ever used. In that same vein, I think Coinbase are probably the leaders in the space. Recently announced they're going to become the bank, essentially. If PayPal aren't going to adopt Bitcoin, let's become the PayPal. I think that's great. So Coinbase, that's where I store all my Bitcoin. So love Coinbase. And then on the other side, on the more technical side, I think kind of expanding what I said about the end of proof of work and how really I don't think that's a sustainable future for the network. There's some other protocols that are coming up that are based on fault-tolerant consensus networks. So Hyperledger is one of them, which is more a federated, distributed startup. And there's also one called Tendermint, which is by SF developer Jay Kwan. It's really good. It's actually, instead of starting with currency, he said, I'm just going to create a consensus protocol that you could use for anything, distributed voting, IP, DRM. Currency is one application of that. So, and that doesn't require, neither of those require any mining. And so to me, that's really important.
But they get verification done across a...
By trusted nodes, yeah.
Uh-huh.
In Tendermint, it's basically proof of stake done right. So what you do is you bond coins, and you sit them there for a certain term, and basically you buy trust in the network to be a verifier based on bonding of those coins. So this is just another kind of like novel way of taking on consensus and doing like trustless payments in a huge network at scale. So
You have a question?
Yeah, I'd like to lay out. Hold on 1 second.
We're gonna get to Q&A, so
yeah, we will. Oh, you're up. You got to tell everybody your favorite too. BitPay, obviously.
Let's hold it until we get a little bit further in. We'll get you though.
No, I think some cool applications around, what you guys talked about with, smart contracts, things like that. I'd love to see that, and identity verification, all that, using the technology for that. As far as startups, I don't really get too involved in the Bitcoin startup ecosystem as much, but, since I was going to say change tip, but Nick just left actually, so I take that back. But I still think I look at all the ecosystem as, BitPay, Coinbase, Circles, Apple, all the startups still trying to maneuver this whole, maze, so to speak. Like, I think what Circle is doing is great. Their application's awesome. Zappo was great with the credit card, but still not really out yet in America. So I'm really looking forward to all this type of stuff.
Right. So let's go from there into the question about these exchanges. So there's a bunch of ways now to sort of buy and move Bitcoin around. Do we need dozens of these things? Do we need hundreds of these things? Is this a positive change? Is it like having banks? Do we need one on every corner, so to speak, or is it?
Hello. Yeah, it's there. It's funny. So we've backed actually 5. I also invest in Coinbase, but like Coinbase is of their brokers of Bitcoin, and the reason was that the way we did it. It makes them not competitive with one another. By the way, the reason that there are all these ones that are starting is because a lot of money from venture capitalists was thrown in that direction of that type of company. And so all the startups are thinking, oh, there's money there. Let's go start something over in that direction.
Yeah, about 120 million just in exchanges at this point, maybe more.
I think it's more than that.
Yeah, maybe more by now. At least 120
It's a huge
million.
percentage of the venture money has gone into that. I actually would follow Wayne Gretzky's quote and go where the puck is headed, which would be the infrastructure companies like Sean was talking about. But what we did with the exchanges was we actually started brokers in Philippines, Singapore, Argentina, Mexico, and Finland. And the reason is that suddenly with these 5 brokers of Bitcoin, they've solved the hardest part of a remittance problem, which is the cash in to Bitcoin and cash out of Bitcoin. But they aren't in other countries, so it's like you're just buying this thing. But Bitcoin itself is very easy to send value over borders. So suddenly we have 5 countries linked up to a remittance network. And for 1% in, 1% out, you can send money to any of those countries. That's crazy. That has never really been done before. Right. And like it's cheaper, it's better. And by the way, in remittance, everyone says that Western Union and MoneyGram are like screwing everyone. And they are. But it turns out most of the money is taken by the banks anyway. But if you're sending like $1 million cross-border, you're not actually saving that much money by using Bitcoin. But if you're sending $150, you're saving an incredible percentage of your money. That's the exciting thing, is the fact that what that will entail. Suddenly the world is getting smaller, and I'm able to send money like $150 for 1% in, 1% out, and I think that margin is going to go down over the next 10 years. I think it's going to be a tiny, tiny margin over the next 10 years, and it's going to be really, really exciting. So that would be my answer to...
Well, to directly answer it, I think I'd say like exactly what Adam is saying is it's about completing that last mile from Bitcoin into cash in local markets.
Right.
And I think within every local market, there will be a few trusted people, be it, the Coinbase and Circle in the US. And then when you go, you have local exchanges in each of these countries so that you can get your money in and out easily. I think that's absolutely necessary, and yeah.
Great.
And at BitPay, we work with merchants globally, right?
Right.
And so they want to settle on local currency, and it's very hard for us in these developing markets to find, local currency exchanges to work with, actually.
Right. So you'd love it if there was one, at least one
I
in
would
every
love
country.
it if Adam started investing in more countries
Right.
and companies all over the country, world,
know.
actually.
Okay, I feel like the audience is desperate to get questions in, so why don't we turn it over to them, and we'll...
Desperate, create demand.
I feel the hands. I feel the hands.
Hi, thank you so much for this discussion. It's really helpful. I've been in the mobile money space now for 9 years, and a lot of the discussions that you're having sound very familiar to things that we've been discussing for the last 7 years, and the infrastructure for cash in, cash out, for example, in emerging markets. And I do agree with you, Adam, and others that I think Bitcoin is going to be the way to do the remittances. The question I have, though, is given I understand also AML, KYC can be handled, let's assume all of that. But if central banks don't have the ability to monitor and manage money supply, if we're using virtual currencies to remit, do we have the risk that this is going to be shut down or other major issues if we were to use that as the main way to get remittances and the fees down?
So the analogy that actually is happening in Kenya, I would use, is that the M-Pesa. So the M-Pesa is a digital currency that is using airtime minutes as currency, and it actually makes up more than 50% of Kenya's GDP, which is crazy. Like Kenya is allowing a digital currency to run wild in their country. It is the preferred method of payment and store of value in their country, which is awesome. And the reason that they allowed this, so it's been going on, I don't actually know how long. If someone has a year, 7 years, okay. So it's been going on for about 7 years now, and it took over 50% of the GDP just because it's a better store of value. But the reason that I heard two reasons that it is being allowed to go run wild, and one is that a prince in Kenya owns a piece of Safaricom, and so they want it to happen. But then the other piece is it costs money to print money. And so they were having a conversation, and there still is debate there of whether or not they should be shutting it down. But they're letting it go because it's more efficient. Like more commerce is being done, more money is being transacted, and more velocity of money is happening. That's the exciting thing for everyone. And so I think that governments in general will. I think it's not a replacement for a currency. I think it's like a parallel awesome thing. I haven't come up with a word for it yet. Yeah, it's TCP/IP of money. No, okay, I'm gonna let someone else go because I'm just saying things now.
Cut him off. He's done. But I think that is your question about government shutting it down too? Because I think what we'll see is governments that obviously have a lot more issues, and we've seen that Russia, India, China love to hide money, and they don't want anything interfering with that. So they may not benefit, but other countries will. And what we're doing as investors is investing into countries that are being supportive of it. And so I said those are easy to call out. And Kenya, we've just done our first Kenyan company. By the way, they don't want Bitcoin; they want it in M-Pesa, and so they've developed that pathway how to get it there. And then Singapore, Southeast Asia, I think we're seeing a lot more activity there. So those are great test beds. We'll keep investing and pushing the technology there, and if it works, countries tend to get jealous, and we'll copy it, and it'll sort of percolate throughout.
Yes, Singapore actually just said that Bitcoin is a service, not a commodity or a property, which is really, really exciting. I bet a lot of companies are going to be springing up in Singapore in the next year or so.
The other question is, when does adoption reach the point where it can't be shut down anymore? And we don't know the answer to that yet. But in some places, if it's too popular, and enough people who have enough dollars in or local currency mixed up and conflated with Bitcoin are going to have a tough time being convinced that they should make this go away. So we'll really see what happens.
Yeah, I think you just got to work with governments as opposed to against them. Like I was saying, there's a lot of people that like to wear anonymous masks and burn flags and stuff, which are associated with Bitcoin. And if we continue that behavior, then the government's going to have no reason to kind of work with us. A lot of people like to say that you can't really take down Bitcoin, but you can. You just have to raid the 3 or 5 big mining installations around the world, and you're done. So I think if Bitcoin continues to be this insular group that doesn't work with governments and regulators, then maybe it will get shut down, and maybe one of these, Apple Pay or Square or something like that will just take its place because they're happy to work with regulators. So a lot of people are anti-regulation. I'm actually pro-regulation because it's going to achieve exactly what you were saying, and that it won't get shut down.
We work very closely with the regulators. We recently announced that Arthur Levitt, the former chairman of the SEC, joined our advisory board. Our chief compliance officer was the former AML head of Visa, and we have a couple of people that used to work at the Federal Reserve on our company too as well. So we're always in touch with the regulators and trying to be as compliant as possible.
Great.
Jim Van Dyke, the founder, Javelin Strategy and Research and Board of the CFPB. So this discussion is a great setup for my question, which is probably hard for innovators to answer. I'll give you a quick setup on it. But the question is, what regulation would you like to see to spur more growth in Bitcoin? And the quick setup for that, most innovators say, look, regulation is only about slowing down innovation. But just as a couple examples of where that's not true, we wouldn't have the growth and the commonality of remote mobile check deposit if it wasn't for Check 21, which brilliantly left the details to Silicon Valley types and just said people had to accept a digital check. And we wouldn't have had people getting access to the real credit report if it wasn't for parts of the FCRA. So sometimes governments actually proactively open markets up. So my question for you as innovators is, what regulation would you like to see in a realistic dream world to open up the market for cryptocurrency usage?
Great question.
I'd say that I think it's really tricky in the US due to different state laws. But I think, most of the businesses that I talk to in the Bitcoin space are all for regulation because they want a playbook. They want to know that what they're doing isn't going to be illegal in 6 months. And so I think some sort of like federal regulation that kind of is rolled out across the states here and then it kind of acts as a blueprint for what other countries can do. I think that would be great because every company wants to be a legitimate company and wants to have basically a guide saying this is how you run your Bitcoin business. That doesn't exist today, so a lot of people are shooting in the dark. So a really well thought out kind of like manual of how to run a Bitcoin business in the US would be amazing. And hopefully there are some regulators in this country that seem to be wanting to go down that path and to work with people in Bitcoin to do that. So I hope that's where it goes.
Yeah, 2 things. I think regulation will legitimize the space. So I actually think that it will make more money go into it, more people go into it. So the people who are starting now will actually be in a better position at that point. The other thing is I just forgot what it was, and it was a good one, so I'm going to try to remember it. Nope. Lost it. Sorry.
We'll let you come back if it comes back to you. What about you, Sean?
Adam's doing a lot of investing in exchanges. I don't because of the regulation, and we have some heartburn. One of the first Bitcoin companies we invested in was an exchange, and they spent all the money on legal and couldn't get more of it. So, for me, I'm not going to jump back into that area until I see more regulation, more clarity, until I see some winners emerge, until I see some liquidity in the market. So regulation in terms of for exchanges, AML, and know your customer, I think that's a little more important for me right now. Once I see that, I jump back into riskier bets and get crazy like Adam.
Oh, yeah. Okay, you got it.
See?
So our biggest problem is actually getting bank accounts for our Bitcoin companies, and the reason is that the banks fear that the Fed is going to feel that they are facilitating money laundering by banking Bitcoin companies.
Seize the assets? Is that or something?
Yeah. They're just always they're living in fear over there, and so it's actually resulting in like a really hard. So it shouldn't. The reason, like Coinbase had a huge running start with having a bank account in that sort of brokering, buying into Bitcoin space, the brokerage space. And I remember talking to Brian Armstrong, and he was saying, "Yeah, I wish banks would ease up on the regulation because then we would have more competition." It was that was like essentially what he said. And so for me, as I'm backing 100 Bitcoin companies in the next 3 years. It's a huge problem for me. So actually establishing regulation that people can follow, what Jackson was saying, where actually having some set guidelines just to start a Bitcoin company. Everyone's being AML and KYC compliant, whether they need to or not. Like
they're being more so than they need to.
Yeah, like these startups are being more compliant than most banks.
But like these banks, I mean, they can move as quick as they want. I think a good example is when Colorado passed, legal pot, and none of the banks wanted to touch it. And then it took about 2 weeks for the government to say, yeah, that's okay. And all the banks are like, get your green cards, do this. We got cookie dough. Please come, work with us. So I mean, I don't know. Like these banks are just taking forever. Like it's 2 weeks for pot, something that usually slows you down, and now we're a few years into Bitcoin. So I think that they will pull the trigger when they want to, and they could anytime.
Did you have something, Sonny, before we jump in?
I was saying, let's see how the New York Bit license turns out. That could be a good stepping point. So that should be announced, this week maybe, or a couple weeks now. So we'll see. We're all in favor of regulation, though, as I think.
Yeah, the Bit license was not the route we wanted. Just in case anyone's wondering.
What is that?
The New York Bit license.
Just look at
It was the first shot at regulating Bitcoin companies, and it was like everyone went around a table and made up rules and then doubled down on those rules.
That's what actually happened.
Yeah, it's sort of. I think that they're shooting for the stars, hoping to hit the moon, sort of thing, and so that they're like, okay, we'll settle at 30% of this.
So they overdid it.
Yeah. But the concern is that becomes a standard, and other states just copy
And because New York is a slightly important banking state, that
a little bit.
we got a guy in the back, so we'll take him first, and then.
Yeah. So, are you? I guess it's two questions. Are you more confident in the future of Bitcoin or Dogecoin, I guess, or the blockchain? And the second question, well, no, it's for everybody actually. Are you more confident in the future of Bitcoin / Dogecoin or the blockchain? And a related question is, what is your favorite non-currency application that could go on the blockchain?
Yeah.
I think you're probably best qualified for the Dogecoin.
I'll get it out of the way. So I don't really have a favorite. I think Dogecoin is a really interesting entry point for a lot of people into cryptocurrency. Like I was saying, Bitcoin's very insular. I think Dogecoin, in a way, is it appeals to a different demographic because it's not as serious, and it's obviously lower value and encourages tipping.
Actually, my question was not if you are more in favor of Bitcoin or Dogecoin. It's like, in your case, are you more confident in the future of Dogecoin or the blockchain technology?
So good question. I'm not overly confident in the future of either Dogecoin or Bitcoin in probably 5 years. I think in their current state, they'll evolve, right? And they'll change. As far as Dogecoin goes, I've never really kind of spouted it as a replacement for fiat currency or, even for Bitcoin. I think ultimately it's a cool, fun currency for microtransactions online. That's what it's being used for. And the second it becomes anything else than that, it's a little bit weird. So it's a dog on a coin. But yeah, and then in terms of, what was the second part of the question?
You saying currency or blockchain?
Oh, blockchain, yeah, absolutely. Blockchain, absolutely. Whether that blockchain is decentralized or not, I'm not sure, because I think decentralization is always going to be more expensive for people on the network than centralization. The very kind of the core concept of cryptography is that it is computationally and due to energy monetarily expensive to crack cryptography. And so if you're talking about a decentralized cryptographic network, well then obviously there's going to be some cost associated with that. And so it's obviously a lot cheaper to host it like Square does in a database somewhere. But I think that federated blockchains or distributed blockchains, that's something that Hyperledger are doing, for instance. They have multiple consensus pools that are essentially just as centralized as Bitcoin mining pools are, but you don't have any of the wasteful mining. So absolutely blockchain. Something built on the blockchain in the future might not be Bitcoin or Dogecoin or whatever coin.
Right, but what do you think? I think the other follow-up question was, what's the most exciting non-currency blockchain-related application that you guys have seen?
I would say, that's a really good one.
Seen or am hoping for.
Okay, either.
Because in venture business, we have to deal with a lot of contracts and investing in a lot of different companies, and it would be really awesome to be able to invest in a company, like have the entire process take place on the blockchain, and then if a company gets sold, distribute all the money, basically replace any middleman that I might have to deal with throughout that process. And I just think it'd be really fascinating to be able to see if it's possible.
Yeah, I like that too. It's like a permanent record. The other thing is identity. I mean, when we think about two forms of identity, the way maybe I log into a website and the way I use a credit card, it makes no sense. A credit card's like, here's my password. I hope nothing happens to it along the way. Same with logins. You're putting the trust in that website, and some websites are better than others. And sometimes it's hashed, sometimes it's not, sometimes it's written on a piece of paper. So identity and how blockchain can be used. Can I log into a site without doing anything? Can it verify who I am using the blockchain network, using the trustless system to let me path and auth and just go through? So identity, I think, is something that we've seen a few people playing with it, but there's a lot way to go. In 10 years, your identity and people trying to attack it is going to be so vicious. I mean, they're hacking the RAM on registers right now. Like in 5 or 10 years, like drones are shooting lasers to steal your identity. Like who knows what it's going to be? We're going to need something more than a password.
You guys laugh, but it's not. It's absolutely going to happen.
Now you scared everyone.
They'll be outside your window watching you type. So that frustrating time when you're trying to remember your password, your best defense will be failing to type it in correctly 12 times in a row.
So to piggyback on the identity thing, I think also I've heard of blockchains being used for reputation-based systems. To build kind of a web of trust. The internet, is full of sock puppets and fake accounts, and to be able to build up some reputation or essentially karma within a network and then prove that you have that reputation of trust, I think would be very powerful as well, and especially in social networks.
Great. I think we're out of time. Yeah. Okay. So thanks everyone on the panel: Sonny, Jackson, Adam, Sean. If anybody stands around and they can grab one of these guys for a minute, they may answer another question for you. I can't promise that. But anyway, thank you all for coming. We appreciate your time and taking the time to listen to us.
Thank you.